This is what I've been screaming off the rooftops forever. Guys, you don't just flip land because you want to make money. You flip land because you want to be in a position that when the next market correction comes, you can jump in and you can 10x your net worth, 10x your wealth, 10x your income. You're getting bargains today in the multifamily space that you probably won't be able to get for the next 20 years again. Hey there, and welcome to another episode of the Jack Bosch Show. In today's episode, we're going to talk about the current trends in real estate investing and how you can be ahead of them and how you can make money in this market right now in 2024. All right, so let's go. So in the first part of this podcast, it's going to be a two-part podcast. Let's talk about the asset classes that are actually not doing so well, where you want to be careful, but also where in those asset classes there's actually opportunity in them. And that is, first of all, let's talk about office. Office space is obviously the big gorilla in the marketplace that is currently suffering. Why? Obviously, because COVID, everyone was sent home. Initially, that wasn't a problem because usually those big companies, they didn't go broke during COVID. They continued to just operate, just everyone worked from home. And the leases on those office spaces, they were like 5-year leases, and they were probably 2 years in, 3 years in, 4 years in. So they still had several years to go. So during COVID, offices were empty, but the landlords, the owners of these offices, were doing just fine because their rent was being paid. But now we're 4 years after COVID, well, after the start of COVID, and 4 years after the start of COVID, what's happening is that most of these leases have expired and most of these landlords have not renewed those leases. Or if they have shrank their office space from 100,000 square feet to 20,000 square feet. They have done hoteling. They have done all these kind of different things, or they just simply converted to virtual working, and their office space needs are just non-existent anymore. And that has absolutely crushed and killed office spaces. There's office spaces in San Francisco, in LA, in different kind of places. They're empty. Yeah, you could go and drive there. Usually, let's say if you needed to park in the parking garage in a good location, in the past you needed to be there at 7 o'clock in the morning. Now you can show up at 9 o'clock in the morning and the parking garage is empty. And that's a real problem. So not only for a problem for that the parking garage is empty, but it really means is that the building is empty. And now with an empty building, what happens? Those loans are coming due now. And that's the other problem, because in commercial real estate, loans are typically only done for 5 to 7 years. Now you can do longer loans, but for whatever reason, a lot of the landlords, a lot of the owners only got themselves into 5 years. Now, the reason is actually very obviously. The reason why they do that is that if you go shorter loans with like Fannie Mae or Freddie Mac in a commercial real estate space, you get lower interest rate. The longer you go, the higher interest rate you go. So in order to save a buck or two, all those owners went with a 5-year loan at the lowest possible interest rate. And now two things come together that really makes it the kind of like epic perfect storm. Number one, these properties are empty, right? So that they're bleeding money. And number two, the loans are coming due. And really that leads to number three. If they would refinance, the interest rates are now twice as what they were just a few years ago, or 1.5 what they were just a couple of years ago. And even if they were to be full, they couldn't qualify for a good loan anymore. And with an empty property, they're absolutely screwed. So what's happening? Banks are taking these properties back in masses, and it is currently not a good asset class to invest in. It's just not, unless you're dealing with a small owner-occupant, kind of like few thousand square foot office space, those are still probably solid investments because you're not renting them, you're using them yourself. The owners are using them themselves. Those have not dipped a lot in value, but it's the big ones that have absolutely crashed in value. And so, but even the smaller ones, the need for them has gone away in a way, has at least lowered. So we made an offer last year to an office space with something like close to 10,000 square feet. And we got outbid by two people on that deal. And I was shocked because everyone was already losing their properties in that case. But again, what this goes to show is that the dentists you still need to go to a dentist to get your teeth cleaned and teeth serviced and all the dental work done, right? Chiropractors, you still need to go to a chiropractor in there. You still, one was a lab. You still need to go, they still need to work in the lab. You can't do lab work from at home. So if you have the right kind of tenants, so this thing was like an upstairs or a downstairs that could have all been combined into one per office space for about 5,000 square feet, which is what we were looking to do for it. And the upstairs was all a dentist and a chiropractor and an insurance agency and things like that will always need a little bit of office space, and they will never operate 100% virtual. So in that kind of scenario, it was a good piece of office that probably still has a market, will continue to have a market. But if your office space is just simply somebody was shuffling paper, those office work all has gone local. Those all has gone home. They all work from home. All is paperless, and so across the board, the demand for office has gone down. And in the smaller space, not as much, but in the larger space, it's been a problem. So office, therefore, stay away from office, because even converting it into apartment complexes is not as easy as it sounds. Because think about it, what does office space need less of? Kitchens and bathrooms, right? Each office needs a little kitchenette, but how many bathrooms are there in office space? Usually one big office space, 10,000 square feet, 20,000 square feet, even in a high rise, huge office space, bathroom somewhere in the middle, and everything else, no bathrooms. Well, if you want to turn that into an apartment complex, guess what? You have to strip it all down, and you have to lay new plumbing everywhere to the entire building. You need to put in new walls, put in new electric, put in new plumbing, put in reinforce for everything, and it costs almost as much as it costs to build that thing newly. So with that said, office, stay away from. Multifamily, let's go into the next one. Multifamily is actually a interesting space because there's some unique and amazing opportunities popping up just about right now in the multifamily space. But in order to take advantage of that, you need money. You need money, you need credit, and you need a good net worth. So this is what I've been screaming off the rooftops forever. We've been teaching our strategy of land flipping for 15 years. And what I've always been telling people is like, guys, you don't just flip land because you want to make money. You flip land because you want to be in a position that when the next market correction comes, you can jump in and you can 10x your net worth, 10x your wealth, 10x your income in that next correction when it comes. And that next correction is right here. Now, I wouldn't invest with a 100-stick pole into office, but I am investing in multifamily. Now, why is that? First of all, people always need a place to live. There has not been a crisis in multifamily. People have gone home, meaning they have gone to the places that we want to rent to them in multifamily. And so they're using their homes more. They're actually needing more space in the home. They need larger apartments because a family of two used to need a one-bedroom apartment. One to sleep in, one to live in. Now they need a three-bedroom apartment. One to sleep in, one for her to work, one for him to work, and the living room. Right? So if they both work from home, they don't want to be both working in one room, particularly if they have jobs where they actually have to talk on the phone a lot. Instead, each of them needs their home office, then they still need a bedroom, and then they have the living room. So the best they can get away with is a two-bedroom. One works in the bedroom, one works in the extra room, and one is and then they have the living room and the dining room and so on. So with that said, the need for multifamily is actually only gone up. The need for multifamily has only gone up that even now when you live alone, you work from home. You want to have more space. You want to have your own place. Instead of living with mom, you rent your own place because that's when you can work from. So multifamily is actually hot. The demand for it is there, but at the same time, also some people made the wrong choices. And as a result, there's a unique opportunity to buy bargain deals. So just a few weeks ago, or actually just last week for that matter, Michelle and I bought a 91-unit apartment complex in Fort Worth, Texas for less than $4 million than what the seller had in it. In other words, the seller lost $4 million. Now, why would the seller want to sell this property for so cheap when the real estate market and the multifamily market is on fire and demand for multifamily is actually there and people need these apartments? Very simple. A whole bunch of sellers did not anticipate the huge surge in interest rates. So what they have done instead, a whole bunch of owners that now becoming sellers actually, instead they bought a property that needed a lot of repairs, let's say called typically a value add, that did not qualify for what's called an agency loan, a Fannie Mae or Freddie Mac commercial, small or mid-balance multifamily loan. So instead what they did is they got what's called a bridge loan. So if a property in multifamily is under 90% occupied, it doesn't qualify for a Fannie Mae or Freddie Mac loan. If it has too many repairs, Freddie and Fannie don't want to touch it. So as a result, what happens is you need to get a bridge loan. Typically that's a 1 or 2 year loan that with a normal bank or with a lender that gives that money to you and then gives you the money to actually rehab the property. And then after you've done all this work and raised the rents and got the property filled up, then they help you qualify into a Fannie or Freddie Mac loan. The problem is that in that two-year time period, interest rates doubled. So these sellers or these owners are now sitting on properties with a maturing loan. But again, because interest rate doubled, their interest payments doubled, the cost of the loan doubled, and a loan is defined by the income. If you have a property that spits out, let's just pick a number, $1 million in income, then the loan can only be an $800,000 or $700,000 or $800,000 a year loan in terms of payments. You can only afford to get a loan that you pay $700,000 or $800,000 a year in monthly payments because the lender always wants to keep a little buffer. So they say I give you a loan where the payment is 1.3 times what the income of the property is. So if the property does $130,000 in income, then the bank is going to give you a loan where the loan payment is $100,000 a year. If the property makes $1.3 million in income, the bank is going to give you a loan that where the monthly payments are $1 million in income. Well, guess what? With the monthly payments, just because the interest rate doubled, the monthly payments doubled. That means the loan proceeds got cut in half. Then before you could get a $10 million loan at a 3.5% interest rate, that monthly payment was $500,000 a year, let's say, including amortization and everything. Now, they can no longer give you a $10 million loan. They can only give you a $5.5 million loan because at an 8% interest rate, that comes out to about the same thing. So the loan proceeds have literally been cut in half, and as a result, those owners that now gotten a high loan at a low interest rate, fixed everything up, but now interest rate has doubled. If they want to refinance, they would actually have to come and contribute several $1 million to that deal. And if they don't have that money, they're forced to sell at a loss. And that's exactly what's happening. That's exactly where the opportunity is. Because our interest rate's going to be up there forever. No, they're not. And they're already coming down. We got our deal with a below 6% interest rate. That was outrageously high 2 years ago. But in the current market, that's a good interest rate. So we got a loan with a 5.99% interest rate. And with that, we were still able to get a loan that actually makes that deal work. But the sellers had to sell because in order to actually hold on to their property, they could have gotten the same loan we did, but in order to hold on to their property, they would have had to raise another $2 million to just be able to hold on to that property. And that was just not possible for them. And that's the opportunity here because, again, the cap rates, which, again, remember, high cap rates means low price. The cap rates have gone up. The interest rates have gone up. The prices of multifamily has gone down because of the loan kind of situation out there. And because of that, you're getting bargains today in the multifamily space that you probably won't be able to get for the next 20 years again. But in order to do that, you have to have the net worth. In order to buy a $10 million property, you have to have a $10 million net worth. In order to buy a $10 million property, you have to put $3 million down. In order to have $3 million, you need to raise the money from investors. In order to do that, you have to have a network. You have to have experience because nobody invests with a newbie. We have prepared ourselves for the last 15 years for this exact situation, but most people have not. So what do you do instead? What do you do as a result? You actually to put the pedal to the metal, because these opportunities will still last for another few years. The office space, I don't know if it's an opportunity or not, hasn't been clear yet. So, but there might be some deals coming down the pipeline so cheap that even that makes sense. But even there, you will need money, you will need experience and so on. So what you need to do today is you need to put the pedal to the metal, and you need to invest in something that makes sense today, in something that actually makes your money today, in something that you can do even if you have no net worth, if you have no experience, or if you have a net worth but you have no experience and you don't want to put your money on the line. And that is land flipping. With our land flipping strategy, we do basically land wholesaling. We take $100,000 deals, get them on a contract for $30,000 and sell them for $60,000, make a $30,000 profit. We're taking $50,000 of deals, taking them on a contract for $10,000, sell them for $30,000 and making $20,000 profits. You do 20, 30, 40 of those deals, you can make the money that it takes to have the down payment for one of these commercial deals. You can now, or you can take that money and invest it in syndication like ours, where last week we raised $3.3 million to buy that deal, and our investors are expected to make 18.27% per year on their investment. So 18% on their money without actually having to do the work. We do all the work, right? So in order to do that, so the answer is that in order to prepare for an opportunity, you need to seize the asset class that works, that you can make into a cash machine right now. And it's not office, and it's not even multifamily as an instant cash provider. Multifamily is a 5-year strategy to make you a really good, amazing return over 5 years, but it's not what you want to do right now in order to make quick cash. Instead, what you want to do in order to make quick cash is wholesaling, but not house wholesaling, because that's hyper competition and hyper competitive and hyper like there's shark infested bloody waters where you have a hard time get deals, but instead land flipping that we have been screaming off the rooftops. As a matter of fact, this is a market where even our 16-year-old daughter right now is closing a deal that she's going to make a $34,000 profit. That's the income of somebody as an entry-level kind of income coming out of high school or sometimes even coming out of college, and where she has multiple other deals in the pipeline and is on track to make 6 figures right now in 2024 as a 16-year-old. This is a market where Eileen Cook, one of our students, is already in the first quarter has already made $69,000 in profits, in cash profits from her land business. This is a market where one of our students, like Mustafa, has made $2.8 million in the last 4 years from land flipping. This is a market where you can actually, from the comfort of your home, where land is on fire. Land was put on fire by COVID, because during COVID, when everyone was sent home, very quickly they were sick and tired of being home. So what happens next is they actually that bred the need for space. People wanted to go outside. They bought RVs. They had money. They bought RVs. They bought ATVs. They bought dirt bikes. And they went out there and they discovered the beauty of rural America. They discovered the beauty of recreational America. They discovered the beauty of being outside of the metro areas. Add to that technology advances like Starlink by Elon Musk, right? Where you can have a high-speed internet access in places where you didn't even have internet access before. Add to that the fact that everyone was working from home, that now it allows you to be in an RV outside of town, enjoy nature, and still be fully productive in your job. And you can see a revolution has started for land. So land is the number one best asset class right now to invest in. 2024 is the year of land. 2024 is the year that you want to go full in on land because, number one, it provides quick cash. Number two, by selling them with seller-financing, it actually provides cash flow. And number three, it provides, by you building up a portfolio of land, perhaps, that you keep in your back pocket, or by you selling with seller-financing and holding the notes, it builds up net worth. And it is absolutely possible that you can build a six-figure, or multiple six-figure, or even multiple seven-figure net worth over the next few years, and then use that to actually then catapult yourself into the stratosphere by being able to have the income, have the net worth, have the credit, and have the experience to then leverage that into commercial real estate when these opportunities are available. Right now they're available. And if you missed out right now, then the time is not to get into multifamily right now. The time is to get into land flipping in order to make the money so that when you have the money, you can invest into multifamily. And for that, it does not take years. We have students like Anila and Tara that in 1 year made $950,000 in profits. So you can put this on high speed. You can put this on turbo, and you can get this to the point that by later on in 2024, you can have multiple six figures in the bank and then use that to leverage that into amazing opportunities in other asset classes. And what these other asset classes are and how you can actually make that happen, we'll cover in the next episode. All right. With that said, thank you very much for joining this podcast. Also, make sure that you actually check out our upcoming Land Profit Masterclass. Simply go to landprofitmaster.com, register for it, because just coming up this coming Monday, we're going to go on a 5-day investor palooza where we're going to show you exactly for 5 days, 1 hour a day, every morning at 9 a.m. Pacific time for 1 hour. We're going to lay out exactly how you can make money with land. All you need to do is go there, register for it right now at landprofitmaster.com. See you there.